This week, the battle for housing finance reform and reverse mortgages is to play out in a Senate banking committee. Last week, we brought the news of HUD's proposed changes to the overhaul of the nation's housing finance system and also to reduce the risk to the American taxpayer. Part of that plan does include 3 recommendations to help reform the federally insured reverse mortgage, or the home equity conversion mortgage program. While not spoken aloud during the hearing itself, those HECM policy changes were included in HUD Secretary Ben Carson's prepared written remarks that for last Tuesday's hearing entitled Housing Finance Reform, Next Steps. It did highlight the political divide in the room on just how to unwind the government's financial backing of Fannie Mae and Freddie Mac. They were both placed into financial conservatorship in the wake of the housing crash and financial crisis 10 years ago, but at the same time keeping mortgages affordable and accessible. Politicians are squabbling over the government's role in making home ownership a reality, but older homeowners who may wish to use a portion of their home's value to age in place were not in the discussion last week. And that doesn't mean that the reverse mortgage program is not facing some significant changes in the near future. In his prepared remarks, Secretary Carson outlines 3 specific changes, 2 which require congressional approval, and the 3rd, a mere policy change by the Federal Housing Administration. First, writes Carson, HUD recommends that Congress reform the loan limit structure in the HECM program to reflect a variation in local housing markets and regional economies across the U.S., instead of the current national loan limit set to the level of the high-cost markets in the forward program. He also adds HECMs as an obligation to the MMIF, reforms that would provide for a more transparent accounting of the program costs and decrease the cross-subsidization that occurs with borrowers in the forward mortgage program or portfolio. And third, HUD proposes that FHA eliminate HECM to HECM refinances as these loan transactions result in greater appraisal inflation, increasing program costs, and negatively impact Ginnie Mae guaranteed HECM mortgage-backed securities due to quick churn in pool participations. Now, some have asked me if FHA would actually prohibit all HECM to HECM refinances or instead remove the incentive to refinance by eliminating the carryover credit of the initial upfront mortgage insurance premium. We don't know, but such a strategy would in fact help slow the refinance activity, but it would not be the elimination that they call for of such transactions. Now, one vexing issue that is not highlighted in the reform plan submitted last week, but is also mentioned in Secretary Carson's prepared remarks, is the servicing of HECM loans. HUD is actually calling for the development of servicing standards and to improve the operational efficiency and reduce the financial cost to the taxpayer in servicing. Shelley Giordano with the Academy of Home Equity and Financial Planning said, "The industry is long overdue for improved servicing where so much of the negative experiences happen for our customers. Also, it looks like the proposal calls for improved oversight of contractors, which again can only help our reputation." Now we wait. We wait to see if Congress will take action as requested and for HUD to issue mortgagee letters for those changes that do not require legislative approval. And later this month, the House of Representatives Financial Services Committee will be holding a hearing to discuss the reverse mortgage program entitled Protecting Seniors, a review of FHA's home equity conversion mortgage program. That's it for this week. Be sure to leave your comments below or questions, and if you would be so kind as to share this video, you can use the links found just below, and we always appreciate those. You can put that on your Facebook and LinkedIn feed. Thanks again for watching, and be sure to return next week for more exclusive reverse mortgage news, commentary, and analysis.